Hey there, traders. This is Sam with another daily futures recap for you. Today is Wednesday, May 14th, 2025. Why are we looking at a 5-minute chart of the SPY instead of the daily chart? Well, I want to point out how important the trend line was today. We talked about it last night and reiterated its importance this morning in the game plan that was available to subscribers. Price in the SPY stayed above the trend line as expected and bounced from it several times. Looking at the daily chart, we can see that basically they went nowhere today and gave us a little doji candle. We'll come back to this chart later to talk about what might happen in the near future. But for now, let's run through the game plan and look at how you would have made money today based on the information that was available before the market opened. You can see that the trend line was going to coincide with SPY at about 586.46, at least in the morning. The bears had just as much chance to get price below the trend line as the bulls had to keep price above, and both scenarios were explored here. As it turned out, the only level that was hit was the trend line, and it produced a solid base hit trade in the E-minis. Here is the 1-minute chart of the entire day. It should be pretty easy to see where the official trade was. Price came down into the trend line after the 15-minute window opened, which is after 9:45 a.m. here in the Eastern time zone. Buying ES contracts the moment the SPY hit that level would have given you an easy 4 points or more. I got slightly more points on a handful of contracts, and we'll watch a recording of that trade next. So that was the only official trade per the rules, although they bounced several times from the trend line throughout the day. You're welcome to trade these levels more than once on the same side if you want, especially if you see other reasons in real time that would add more validity to additional trades working at the same level. But I prefer the first hit is the best hit approach. So I waited until price got down to the trend line and I went long with 4 contracts. I kind of wanted to see what they would do with the trend line because there was still a good chance the bears could have pulled price down below that area, but I trusted the process and bought at the trend line and pulled 3 of the contracts off at a decent number of points and then got stopped out with the last contract at like a tick or so. Basically netted almost 6 points on the 4 contracts. After that trade was in the bag, I had no interest in paying attention to the market. I let the recording go until I stopped for lunch. So, pretty straightforward day, easy trade. Here's a look at the tracking logs, starting with the playing by the rules log. Not much to say about it, really. 1 base hit trade of 4 S&P points if you were treating it as a process. You can look around at the metrics to see where this puts us at the midpoint of May. And then on the Sam's Trades log, same level but slightly more points overall. Before commissions, the total was $1,174 on the 4 contracts, and all within the first 25 minutes of the open session. I like mornings that work out like that. That's a wrap. Thanks for putting up with the cloned voice thing. It's probably pretty obvious it's not me talking live, but it was easier to do it this way today. Thanks for watching and following the channel, and thank you to everyone who is subscribed to the daily levels and getting them and the game plans each morning. I hope you're making money and learning a few things along the way. I'll be back tomorrow morning with new levels and a new game plan, and we'll talk about what the near future might look like. I guess I did say we'd circle back around to the daily chart, so let's go ahead and pull that up again. Here's what I'm thinking at this point. The timing component is still good for the bears to try and pull price down from where they're at. But that could be a process that takes time because on a lot of the intermediate charts, what price is doing is making a bullish consolidation around that trend line. My expectation is that we'll see more reactions around the trend line in the near term. It just seems less likely that the bulls would keep rallying from here. But I've been wrong about this kind of thing before. I am aware that it's hard to kill a bull. We need to be aware that if price gets below the trend line and starts closing daily candles below it, that puts the bears in a better position to maybe fight a little harder to get a reversal going. Until or unless that happens, things are still bullish. That's the quick take on what I think the near-term future holds. And with that, I'm closing the curtain on today's recap. Thanks again, and I'll talk with you again soon.